Wow, another tough day trading in the stock market. I'm telling you, September is very unpredictable. And if you're accustomed to playing technical analysis like what I'm accustomed to, well, you're gonna get burned if you play technical analysis because September is level to level or extreme to extreme. So you can pretty much ignore technical levels unless you're using the big picture like the daily and the weekly. But the intraday technical level like the VWAP and the moving averages and all these indicators or whatnot, they are pretty much head fakes and they are gonna blow your account if you are not being disciplined. And what is that definition of insanity? Doing the same thing over and over again and expecting different results. Well, that's really not the definition of insanity. That is the definition of being human because we are used to doing things a certain way. We got habits and tendencies, and to break those habits and tendencies, you pretty much need to talk to yourself, repeat to yourself, have notes, whatever method you can to remind yourself. Do not play this way except unless the condition is different. Right now in September, if you playing the push strategy in September, you are gonna get burned. If you play the technical analysis in September, you are gonna get burned. You pretty much gotta play level to level, extreme to extreme. I mean, look what they did on the QQQ, the Nasdaq. I mean, they opened it pretty much at the low. Like, I kind of expected it, but I was hoping for a gap up because yesterday it closed at the 5-day moving average, and if it gapped up, well, I knew. Oh, I was expecting a downturn, and I was expecting to get in on the puts or the shorts or go, and it would have been very profitable. But guess what? They don't even give it to you. In fact, I was expecting them to gap it down to the 50-day moving average. They don't even give you that. I mean, they gap it down to the low. Oh my goodness, they gapped it all the way down to the low of Friday. So what can you do? Well, I mean, geez. Um, when you see a gap down like that, most of the time, and I don't know why, I mean, I guess I'm just during these times where it just feels like the market about to crash, you just get scared. And next thing you know, Tesla's already rallied. Oh, how many points is that? 20, 30 points, whatever it is. I mean, geez, look at that missed opportunities. All that pushing and everything. I mean, if you ignore the previous days, anybody who's a day trader and open and begin the day fresh, I mean, the smart thing to do is get in right at the open. Look at that Tesla move. Look at that Apple move. And they moved it all the way to the flat line for Apple. Well, that is almost extreme to extreme. Anybody who chase this is gonna get hurt. And what they do, extreme to the other way. Don't even pause on. Well, I mean, there's some wiggle at VWAP, but if you trying to play counter rally on VWAP, if you're accustomed to technical analysis and you're expecting, oh look, VWAP support, they're gonna return this and start buying again. Well, you're gonna get burned all the way back down. I mean, that's just the way it is in September. It's extreme to extreme. Um, Amazon is what I'm playing today. Jeez, I need to. I mean, I hate missing out on these Tesla and Apple run up when I know. I mean, I've seen this so many times, but I just get scared. And once it starts running up, well, I can't play the push. And playing the push is one of those things where you just got to practice and understand what the push means And for those who play it in what is it, August, they would have caught this push, and of course get out on the retracement. Those who play the flush, well, I don't know. I mean, I guess I don't call this a flush, but I call it extreme to extreme. So yeah, you can, man, come on, get up and buy this at the bottom, sell it, and then here it is, cover this. I mean, that's just so profitable if you play the right strategy. But the stock market is one of those things where you gotta understand when you step up to the table, like a casino table, you know you're playing poker or roulette or blackjack. Well, in the stock market, you step to the table, you don't know what the game is unless you really understand and have the insight of how to play it. And a lot of time, if you wait for the game to develop, it's already too late because now is afternoon trash. And if you look at Amazon, let's look at it in the big picture because that's really what I like to play. Amazon. So here is Amazon. Let's go here and zoom in a little bit. Okay, so Amazon gap down to 3,000. Okay, pretty much wiggle at 3,000, and then it sold off. I mean, there's opportunity to scalp. Scalping is, of course, very dangerous, and you can be successful at this point. But at a sudden, I mean, you gotta understand that eventually they are going to move it from extreme to extreme. So if you're scalping and all of a sudden you got in on the wrong direction, and this is a lot of pain. I mean, that's a lot of pain if you're selling options or even buying the cars and it's going the wrong way. Well, at this point, that's a classic reversal signature. These kind of candles, I mean, geez, I uh, I mean, I was watching this and I was in on the wrong side, and it felt so painful because these movements are just so wicked, and it just feels like, geez, I should cover, but I'm like, man, I can't cover. I mean, this is just, and then of course, right when it goes my way. I did cover for a little bit of a gain, but look at all that miss. Extreme to extreme. And then at this point, geez, how can you play the opposite? I mean, it just feels so bullish. Feels so bullish, but if you actually have the discipline to play extreme to extreme, and this is a reversal candle, an obvious reversal candle. I mean, this could have also be a reversal candle, but the formation is different. They could have had two big wick, like just like they have two long tails. And of course, extreme to extreme all the way down here. Now, why doesn't this go extreme to extreme? Well, it's pretty much afternoon trash at this point, and extreme to extreme does not apply for afternoon trash. So the game is different in the morning and the afternoon. So now, if you're playing the scalping game, you can probably do okay scalping it for the afternoon. However, they can obviously hit it at any point in the afternoon. I mean, they can hit it boom all the way down, or they can just run this up. Um, it looks like 3,000 is the target, but look at this. Look at the weekly. That 20-week moving average is a magnet. And where is that 20 weeks moving average? 2,900. This also tomorrow is not only the monthly expiration for the option, it is quadruple witching, and I forgot to look it up. Oh, jeez, because every quarter there's quadruple witching, and September is this quarter, Q3 quadruple witching. December is Q4 quadruple witching. And the third weeks of the month, September, very volatile and very crazy. So they're gonna move it to level. So Looks like 3000 is the level, but that 2900 looks pretty enticing as well. 2900, especially on this 20-week moving average for Amazon. So I wouldn't doubt that tomorrow they can try to flush this thing to 2900. So anybody right now who think 3000 is a good level of support and playing it safe and holding it, they can be in for a rude awakening, because next thing you know, they are gonna flush it down to 2900. You say, what? How can they invalidate 3000? How can they invalidate 3000? 3000 is such a round number for quadruple witching or option expiration. Nope. Means nothing when you got this 20-week moving average sitting right here at 2900, and it's just looking like a magnet for this to go down to on the weekly candle. Ending this right here for the week would make it so nice looking on a what this week on quadruple witching. A pretty nice candle, right? Support on the 20-week moving average. So, yeah, I would not be holding anything and expecting 3000 to be the support, even though it feels like the support. It's a round number, and but geez, who knows? I mean, it can also go back up. I mean, and then wait. If this goes back up to 3100, you have a nice candle where it can go to the 20-week moving average next week or the week after next. It's depending on how the formation forms for these patterns. So I would not trust 3000 as the target for option expiration of, even though it looks like the obvious target. It may or may not apply because things don't always go, they never go the way you expect, especially in September. I mean, this is just crazy month. Level to level is what you're gonna have to play. What did I end up with? Well, 3000. The reason I end up with 3000 is because of this. Pretty much is what I I sold from yesterday, expecting a downturn. So I sold this 3150. Normally I do not sell something and hold overnight, but the conditions are different, and I've been doing that's a new strategy I am employing because it is a profitable strategy, although it is a risky strategy if it goes the wrong direction. I just felt like these 3150 cars would not be held up, and so I sold it, and it came out to be pretty profitable. Minus this, I would only be up what 1500. So yeah, I mean 1500 is okay, but actually what 1700. So actually, I only made 1700 because that is what I performed for the day. I don't really like counting these position that I hold overnight, and I was just planning on holding this for expiration to expire, and I might do that, but I don't trust that they may rally this because it is quadruple witching, which is exploration of futures, commodities, and stocks and bonds or whatever. So very volatile for tomorrow. Tomorrow I may play a contingency, not a contingency, a position, a straddle where I have both a call option and a put option. Only risk you have to that is that if they target 3000, um, you may have to get out, and well, if they target 3000, but the volatility should be enough. So I would probably play it if it lands on 3000 for the end of today. If it opens up at 3000 for tomorrow, which is what I'm expecting, an open of 3000 for tomorrow looks like the play, if and then buy both a call and a put. Hoping it'll be only $20 for the calls and the put at the 3000, or I play maybe the 3050 the 2950, one of those guys, and just play the wiggles, I guess. Um, Probably will not be selling options much tomorrow because the chance of a flush is pretty high unless I am playing the downside. Well then, but then they can also push it tomorrow. So yeah, pretty risky option exploration tomorrow, especially quadruple witching. How would you play it? You gotta be nimble and you got to be careful. Yeah, 3,000 looks to be the target. Tesla, geez, I mean, Tesla is gonna go from extreme to extreme. Look at that. Apple is always extreme to extreme. And looks right now like the Bulls got some holding position, but I don't trust any of this in the afternoon. It may, yeah, let's just see what develops. But at this point, afternoon trash, man, geez, it's probably best not to play and see what happens. I will not be holding any position overnight. Will never hold a position overnight from Thursday to Friday because the intrinsic value is already so low. So how much are you gonna gain on the intrinsic value from Thursday close to Friday open? Not much at all, and it can gap up, gap down in any direction. So that would not be a very smart strategy. But for the continuation of September, playing level to level, extreme to extreme is the way to play. You got to avoid the scalping or this any technical play where you're trying to counter trend at VWAP or support at VWAP or 100-day moving average or whatever technical analysis you're using. Anything in betweens are trash until you get from level to level, extreme to extreme. That is where you're gonna make the most money. Gotta keep reminding myself extreme to extreme and stop playing the scalping game because at one time I was down quite a bit playing the stupid scalping game. I was like, man, not again, because what did I do on what is it, on Thursday? I mean, on Monday of this week? Got that stupid loss of 3,000 on this trickery. I mean, geez, VWAP support trick. Boom, all the way down. I mean, this is what they do for September. If you get plain technical analysis on VWAP or 100-day moving average, they are just going to kill you with the extreme to the extreme. Of course, if you're brave enough to hold, of course, look at that, all the way back up. So, but who wants to hold a negative $5,000 loss until they become a positive? I mean, who's gonna risk that? Especially if you ignore all of this in between and all of a sudden it's down to here. Well, that $5,000 loss is now a $20,000 loss. I mean, do you really want to play that loose? I don't. So stop playing the intermediate scalping and these technical levels. I mean, just play extreme to extreme and you'll do well, because right now you cannot do technical analysis. You cannot play the push, because any push is a potential head fake and they go the opposite direction. You play extreme to extreme and be nimble about it. Okay.